I want to be
I
respectful
do.
of Cheryl's time because she's carved out 30 minutes for us. So we really appreciate that. Kelly has a question. So take it away, Kelly.
Hi, Cheryl.
Hi,
How are you?
I'm good. How are you?
Good. I just wanted to start out saying that we love you here
Oh,
at
thank you.
Burgmaier
I love you
Associates.
too.
You are probably a big part of, the firm and how great we are with clients. And I just wanted you to share a little bit about your background and how you became or how you became a CPA and a CFP.
So I've been a CPA for a really long time. I worked at Coopers and Lybrand in Syracuse, New York, along with Eric. Yeah, that I couldn't even tell you the year that I became a CPA. Very long time ago. Became a CPA because I'm the type that's like, okay, this is what you're supposed to do. You go to school for accounting, then you study for the next test, and then you take the test. You do that, right? And I've always loved accounting. I actually was going to be a nurse. Yeah.
Fun fact, which
What's
I
that?
didn't know that.
Oh,
I didn't
no,
know
you
that.
don't want me as your nurse. I'll be very caring, except if you start crying, all bets are off. That's what
Everybody cries.
yeah, yeah, yeah. Like if there's a little kid that's hurt and the mom's crying, forget it. And my brother said to me, he said, "How are you going to be an accountant? You're a crier." And he said, and he's 11 years older than me, and he said, why don't you become an accountant? Everyone needs an accountant. And I was like, oh yeah. And looking back, I used to like reconcile my mom's checkbook for her. Like I thought that was fun. So I think I'm where I'm supposed to be, doing what I'm supposed to be doing. But yeah, so that's kind of how it started. And then I went to Coopers and Lybrand, did audits. I did not like audit. But really was a great place to start and to learn a ton about how accounting works, what the certain things that are important, how to read financials, how to analyze financials. So it was, I can't say enough about the great experience I had there, but I knew that's not what I wanted to do. It wasn't a lifelong passion of mine. Speed forward, we moved to Albuquerque, worked in public accounting here for a little bit, started having kids. And I am not a very good stay-at-home mom, meaning I get really antsy even at the end of a long weekend that I need mental stimulation projects, things to do. And so I started working part-time as an accountant for some CPA firms. Eventually started my own practice. There's a whole long funny story about that too, but started my own practice. And then over the years, Eric joined, we acquired practices, we sold some practices that we bought, this big, long process. And then as we grew and had relationships with our clients, we would see clients that would need some additional assistance, not just taxes and payroll and accounting, but then, oh my gosh, our practice has grown. We have money. We've never had money because, like a lot of dentists have student loan debt.
Mhm.
And so they're like, okay, we're finally at a point where we're starting to accumulate some money. What do we do with it? How do we plan for our future? So I became a CFP. So I took that exam. I'm studying right now for my Series 7 exam. And it's really just in a way to be able to provide more in-depth services to the clients, the things that they need, the things that feed my soul. For me, while I love accounting and I think it's fun, and I know that sounds ridiculous, but it is. The piece that I'm missing is where I feel like I'm giving them real value in their lives. And that's where the financial planning piece is coming in. Going forward, I'd like to spend more time doing that.
Why personally do you think you love and started working with dental practices?
Part of it was when we acquired one of the firms that we acquired, they had a heavy focus in dental. And we realized they're really great clients. They're smart. They have really great businesses. And unfortunately, to their detriment, they're not really given much business education as they go through dental school. Eric likes to refer them as reluctant entrepreneurs. They went to school not to be a business owner, but to be a dentist. But then most dentists are independent. So then all of a sudden they realize, oh, I have employees. I am going to have employees. I'm going to buy a practice. I'm going to have employees. I wasn't taught anything about that, and so I love working with new business owners because I think they feel comfortable talking to me about, this is a new realm for me and I want to be able to ask questions. I think that's something that that I think they feel very comfortable coming to me to ask questions. And Kelly, we've had this conversation before. It's like, we may not have all the answers, but maybe start with us and we can kind of give you guidance on where to go next. I don't do insurance, but we know people who do handle insurance. So disability and life and all of those things, going through buying a practice and needing life insurance to address some of the compliance on loans. Anyone that knows me, one of the things that I love to do is help people. At the end of the day, when I think about what made me feel good about today is when I'm like, either I've done a really good job of helping one of my employees be better and do something differently that they were struggling with, or helping a client on something that they were struggling with. And new business owners, they have so many struggles. We've had some clients, Kelly, like I remember a dentist that bought a practice, and then like his first week had really kind of a really awful thing happen with an employee.
Yeah.
Yeah. Who quit, but refused to leave the office.
Yeah.
And so he's like in his office whispering to Kelly, and that was like, it's like, okay, well, welcome to being a business owner. But that's from the dentist, from the reason why I like the idea of being focused in dental is, one, they're still independent, they're small businesses and they need us. Here in New Mexico, one of the reasons that we're big in dental is because there's very specific rules around we have a gross receipts tax here in New Mexico, and we have a tax on services. And unfortunately, dentists experience that. So if you're from out of state and you move here, this is kind of something new and unusual that needs to be addressed. Now, the state doesn't just say everything is taxable. There's exceptions and calculations that need to be done.
So so if I was to talk to you a little bit on the sales side, what do you think that a dentist should consider as far as financially before they decide to sell their practice?
So many things that open so many things. One of the things is, I would ask, why are you selling? What's the purpose? What's happening next? What's your plan? From a financial perspective, they have to understand what their numbers look like today and when they sell, what happens. So they have to consider tax. They have to consider the debt payments that they're going to have to pay off. So while they're like, oh, great, I can sell it for this, there still has to be consideration that, hey, Uncle Sam still wants part of that. Bank of whatever wants their money back. So what do you end up with when you walk away? Sometimes there's a pleasant surprise and sometimes there's a not so pleasant surprise.
And balancing that with the valuation, right? So like if somebody owes a lot of money and they have a lot of debt, and where our value comes in, they have to consider that they may not walk away with a lot of money.
Yeah. So one of the things you have to consider is, okay, is now the right time to sell? Are my finances in order? Is my practice really efficient? So that I have profit? Because there are some that will value based on the top line. I don't care if you have $10 billion of revenue. If you make zero profit, your business is not worth much to me. But if you just calculate the value based on your top line number, and this is more from a buyer's perspective, you may overpay if you're just looking at a calculation off the top line. You really want to look at the efficiency, the profitability of the practice. But to that point too, if I'm selling, I do have to consider, what is the tax impact of this? How are we selling it? Are we selling it outright? Am I just going to get a massive check and have everything paid off because there's tax consequences of that? Is it going to be an installment sale, which means you're doing like an owner financing and you say, okay, new doc, I'm going to sell it to you. You can get a loan from the bank or give me a down payment, and then I'll be kind of your bank. You pay me over a period of time. Then to Kelly, to your point, is it the right time to sell? If I just remodeled and I have a ton of debt to the bank for this remodel, sometimes you're selling because you have to. Sometimes you're selling because you want to. You have to look at, if I have all this debt, you have to remember, you got to pay them off first. One unusual circumstance, I shouldn't say weird, one unusual circumstance where they are not paying off their debt. They're going to continue to pay off their debt. They received payment for their sale, but they're going to continue to pay down their prior debt, which I find fascinating because I don't know how that's even possible. Yeah.
I think sometimes what happens is it's converted to a different type of loan. Or did you have a question for Cheryl, Rachel? On that side, on the valuation side of debt and value?
Rachel sees it all the time.
Yeah. I'm not sure that it necessarily should be addressed now, but I'm interested in the pros and cons of doing a lump sum payout versus overtime payout, because the valuation part, I don't deal with that, but I'm interested because most of our sellers do not want to owner finance. They want to be paid out at 100%. But
Well,
I'm
yeah, 'cause they're getting
curious
ready, because, well, yeah, because they're like, I'm done. I don't
because
want
they're
to.
done. And
Yeah.
because there's this additional ongoing liability of, if I don't get all my money up front, what's the guarantee I'll ever get all my money?
Right.
But I'm just curious if there is a benefit to being paid out over time versus a lump sum upfront payment.
There can be, and it really depends. It depends on the numbers, honestly.
There we go again with the depends.
It depends. It always depends. There's always
It depends.
different situations.
Yeah, and it really does depend, because it's going to depend on so many things. So I can't give a straight answer on that. And but I can agree that there are people who don't want to do owner financing, and I don't blame people for not wanting to do that. If the buyer is struggling to get bank financing, they're usually pretty good at analyzing risk. If they're not willing to lend, it may not be ideal for you to be the bank if you're
Right.
selling. If you're ready to sell and just get out of Dodge and go on your merry way, owner financing is not the way to go. And we have seen, even in, I think, a sell to a DSO, and I don't know the exact circumstance, I don't know the arrangements, I don't know all of that, but there was one that kind of fell through, and now the dentist is, who thought they were retiring, they're back in the chair. If you sell outright, you don't really have that risk. But there could be tax benefits or consequences depending on which way you go. And then again, it's a longer term relationship. And depending on if the doctor is working for the new doc, the seller is working for the buyer, and relationships aren't as the way that they would hope after like a certain period of time, then there's still this financial relationship. It can be bad. It can be great too. I've seen it both ways.
What do you feel are some common financial mistakes that dentists make during the transition process, whether it be the seller or the buyer?
Yeah. So the seller who will get a chunk of money, we tell them to don't invest that money right away, or don't invest all of it. There should be some that's held off in maybe a high yield savings account, so that they have access to that money when they need to pay their taxes. The one thing you don't want to do is take, like, yay, I sold my practice and I have $1 million. Let me put the entire thing in the market, and the market goes, ebbs and flows. And then tax time comes and you have a tax bill of $200,000 because you have a massive capital gain from the sale of your practice. Now you have to sell stock at a loss to pay. So now you have this capital loss, now getting all jargony.
Took more than $200,000 to pay
more than $200,000 to pay that tax. So that's one of the things, is just really having a good plan for the money on the back end of the sale, for what do I need to keep liquid to be able to cover taxes, and then what is the plan for the other money. If somebody's doing due diligence and looking at a new practice, I think they really need to look at the profitability of the practice. We've seen some times where new dentists have overpaid for a practice. Now, there may be potential for growth in the practice, because again, the retiring doc isn't going like, I'm gonna bring in 20 new patients a month and I'm gonna keep growing this practice. That's not where their mindset is when they're selling. But the new doc is new to it too. And so they're learning how to be a practitioner, learning how to take care of these patients, learning how to be an employer and an advisor to their own staff. They may not be as efficient, where the other doc has had 30 years of practice and knows kind of how to do it. Also, the other thing, the selling doc probably way better at selling treatment plans than a new dentist. I think they're getting better at teaching that, but I think sometimes the newer doctors are a little more hesitant. They're a little less effective at the communication of why it's so important for the treatment. And I think they really have to believe in what they do and believe that their treatments are healthcare and they're for the benefit of their patient, and that's helpful. But so you
Or
have
it could go it could go the opposite way too, if they come from like a big corporate where they are pushed to sell, and they get into a small little practice that, you know, the doc just educates his patients, and that's how he sells treatment plans. And you have this doc coming in from corporate and they're pushing and scaring patients
Right.
away.
But yeah, you're
Yeah.
right. You just don't know, and the personalities of what it's going to be like. I mean, we had one who, it was a young doc sold to another young doc. It was great. It was just, the seller was just moving on to something different. And there was so much opportunity potential in the practice. I think they probably got it for a steal, because they were able to implement changes in it and grow the practice so quickly.
I know that there are two different sides to when you allocate the purchase price in the purchase agreement and even in the letter of intent. When you look at tangible assets and you look at goodwill and how people fight over that. Well, really, attorneys fight over that. Dentists really don't know why they're fighting over that. But can you give us a little bit of insight on why that's meaningful and why that's becomes not a disagreement, but kind of an argument point with attorneys?
Yeah. So, and again, Eric is going to be way better at
I know. Because we had
talking
to have
to
a
this
conference
point,
call with them.
unfortunately. But I mean, essentially, they have competing tax benefits. So, and I always have to think about it, because again, this is Eric's realm. But yeah, both parties have to report the way that they're reporting on the tax documents. They're going to say, this is what we sold and this is what we bought. And so the new buyer is going to want more allocated to equipment, because they'll be able to accelerate the expense faster. Meaning you can do like a 5-year amortization on that. Now, goodwill and intangibles, you know, patient charts and those type of things. And like, now I don't even know if non-competes are even a thing anymore, but those have to be amortized over 15 years. So the buyer wants to take that expense as fast as they can. The seller wants the other way, because there's the tax calculation is going to be different.
Because it seems like from both sides, like the buyer's like, but I'm paying 1.5 million. Do I care how it's allocated? Well, yeah, you do.
Yeah,
have
you
to
do.
care how it's allocated.
You do.
Because there are certain tax
And
implications.
the seller does too. So the attorneys are right to, they're battling for their own client. So I get that. Sometimes, you know, I don't know if it makes such a huge difference, but yeah, that's why.
So do you normally see like, oh, the typical split is like 80% intangible, 20% tangible? Or do you say, well, this practice has, you know, estimates $300,000 of equipment, so that's what we're going to use for our tangible and the difference?
Yeah. So again, it's going to depend on the financial circumstance. So if it's, how old is the equipment? You know, how much equipment do they have versus the revenue that they're generating off that equipment? So there's no standard. It's like a 75-25 split. You can't even look at it that way. They're all going to be individual kind of calculations. You know, we'll look at the equipment that the new doc is acquiring, and there's going to be a value put to that, an estimated value. And that's kind of how we'd probably look at it. Rachel, you could probably speak more to that from the calculated portion of what are we considering equipment versus goodwill. If you have one deal at 1.5 million and another deal at 1.5 million,
allocation can be totally different.
The allocations can be completely different.
Yeah, because we always like to get what, you know, like a tangible asset inventory. Like I want to know what's a really good estimate of those tangible assets in the event we were going to do some kind of like liquidation, fire sale, whatever. But just curious if that would be a number that you would go by, or if there's, you know, some typical split.
I don't
Just because some practices have way more equipment than others. Some practices have way more expensive equipment and lasers and, you know, all the fancy.
It's going to be completely dependent upon the deal itself. But it shouldn't be like 100% allocated this way and 0 to that. And I've never seen a 90-10. It's going to be somewhere in the middle. And so some people allocate some of the cost to supplies, right? So they'll say, well, we do have dental supplies that you're buying. So some of that, and supplies can be written off almost immediately because every month you're buying supplies. But you can't say, of my $1.5 million purchase,
30% is
4
supplies.
million of it is supplies. Like that's just not reasonable. I had a call with a client yesterday, and their business, one is in it, they're not a dentist. Their business is growing like gangbusters. They're hiring contract labor to do special projects. Their numbers ebb and flow because they're project based and their projects are short term. And so he's like, well, how much should I pay myself? And I'm like, it's hard to say, because some months you have $300,000 of cash. Other months you have like 150, or in other months you have like 19,000. I said, here's kind of what we'll plan for. And then we're going to, so it's every circumstance is going to be dependent upon what's happening. And so, but I know he wanted me to tell him exactly what to pay himself. But again, when the numbers are all over the place, it's hard to say.
What advice would you give a younger dentist who is just starting to think about their long-term plans?
You mean like from like a financial planning perspective, or just from?
Yeah, like, oh, well, I'm in corporate right now, but I'm thinking about, should I buy a practice? Should I stay in corporate? Should maybe of course I should invest in my retirement, but where should I begin with that?
Right, I
Well,
still have
somebody
student
that's
loan
kind of
debt. Where do I deploy my money?
And also about student loan debt. And we always talk about how dentists always are like, oh my gosh, I have all this student loan debt, and they just want to pay it off. But isn't student loan debt something that's not as worrisome to have as debt over like credit card debt or
Well, yeah,
stuff
I
like
mean,
that?
student loan debt is going to have a more reasonable interest rate. Credit card debt is awful. While even if it's for the business, if you have credit cards, you really, really need to make sure you're paying those off at every month. I think, just in case you don't know, credit card interest rates, I think, are at between 28 and 30% at this point. So what you think you're paying for something is now 30% more expensive. If you leave.
Yeah, and not only that, but banks that finance. So the banks that are financing, what they're looking at more too with the dentists financing practices is they're looking and they're saying, do you own your own home? No, don't own my own home. Do you have student debt? Yeah, I have a lot of student debt. Have you been paying on that student loan debt? Maybe just the minimum, like, through the SAVE program or whatever. Okay, well, how much credit card debt do you have? Oh, I have a lot of credit. So in situations like that, if everything
that
hits
can
a
hinder you
check
from
mark,
even being able to buy a practice.
that can prevent you from purchasing a practice. So really eliminating your credit card debt when you're looking to buy a practice, right? You should really eliminate that credit card debt. You shouldn't have that. When you start looking at practices.
The other thing we always talk about is don't go out and buy $100,000 Tesla.
Right.
Just because you graduated and now you're going to have a job. We really need to be wise with our money. We really have to make good choices so that when you do want to buy a practice 2 years down the road, you haven't already locked yourself into debt payments that the bank is going to say, well, you have too much personal debt that you can't function. Now, buying a house is different. If you want to buy a house, I have a completely different feeling about that. But as long as it's a reasonable house and it's not going to hinder you from like they're going to look at your credit, the level of loans to income. And if you can't support those and you're getting too close, you become more risky. And they say, I don't know if we want to do this deal, which is really a shame because then you get excited to buy a practice and then the bank is saying, can't do it. So my recommendation, and again, I'm a money squirrel. I save money. I have it in a variety of different things, doing different things for me. I'm an accountant. That's kind of what we do. I just don't want people to get so excited when they have that job that they can just go gangbusters spending, because they have for a long time not spent anything. They've been really kind of tied to that dental education and probably watching every penny at that point. I mean, it's funny. We did have a dentist who was like, I really want to get a new car. And this was, he had owned his business for a couple years, and he was still driving around his like 12-year-old like beater that he had in dental
Oh,
school.
he actually called me and was like, my car broke down.
Can I
So
get a new
I've been
car?
getting rides.
Oh,
And I'm like, okay, buy a car
no,
already.
he's my kind of person though, because it's like, he's like, I'm gonna drive this till it's dead. Yeah. So, and what's funny about that is he probably has a ton of money saved off to the side for particular things, or probably just for retirement or for savings, just to be comfortable. And now he's asking for rides. Yeah. So there's a happy medium there, right?
Yeah.
I had a client years and years and years ago. He actually ended up firing me because I said, stop, you're going to debt yourself into bankruptcy. You're going to buy equipment till you're bankrupt, because he kept doing it because it was a tax savings. And I'm like, yeah, but you still owe the money to the financing company.
Right.
And he really didn't like my answer. But I kept getting so frustrated because I'm like, we have this conversation every December. Tell me why you need this piece of equipment. And again, it's his money. He can do what he wants. It's his business. But me, as the caring person who wants to see them succeed, I'm kind of trying to like give them the other side of why this might not be a good idea.
So, Josh, do you have any other questions? Do you have any questions for her?
Well, I was thinking of a couple of things that came up during the conversation. One, you said a little while ago about, it doesn't matter if your business is making $1 million a year or however much you said, if your profit is zero. And I think you mentioned a book before is it called Profit First?
Oh yes, profit first.
Yeah, I think it would be really interesting. I don't think, honestly, the more I listen to this episode, the more I am convinced we could go a full hour and beyond and still have a lot to talk about. Though obviously this is kind of a more condensed version.
Yeah.
But I think it'd be neat.
I love profit first. We actually have a lot of dentists that try to implement it. I kind of modified it to make it easier. Because again, as small business owners, we're very busy and I don't like to make things complicated. And he doesn't try to make it complicated, but for me, it seemed complicated. So I've kind of simplified it. But yeah, the profit first concept essentially is, you have, normally it's revenue minus expenses is your profit. Well, what this gentleman, Mike McCallum, said, really, we need to flip that to avoid being a broke business owner. You're going to take revenue less my profit, and then I have money left to spend on my business. So there's a lot. We could totally do a whole other thing. I thought about it today. Actually, I was like, that would be a great summer series for people to come into the office, and I can help them implement it because I love it. I'm really passionate about it. I think it helps people. I've helped clients implement it for if they're trying to buy a piece of equipment, buy a building, even if people are working and they're trying to figure out how am I going to save enough money to put a down payment on a house, or just a variety of things. So yeah, you got me all excited. Now that's my